A lot more needs to be done to attract private sector capital into financing capital-intensive infrastructure projects if Kenya is to ease the rising burden of debt being saddled on the economy. This is according to the World Bank Vice President for Infrastructure, DIOP, who says that there is a lot of idle private capital which could be put to use. I sat down for an exclusive interview with DIOP on insights for this and more. Huge expenditure outlay when it comes to infrastructure has often been the object of critique as far as the ramping up of debt is concerned. How do you see it from where you sit? Because there are a lot of concerns about debt distress because of some of the kind of projects we've engaged in.
When it comes to sustaining this level of investment and keeping the levels of debt at a moderate level or low level, you need to bring the private sector. You need to bring PPP, and it's why at the World Bank they put in my vice presidency energy, transport, PPP and guarantee and ICT, because all of these are linked, and we need to think about a way of bringing in the private sector to invest in infrastructure. Okay,
and talking about bringing in the private sector, institutional investors in this market will often decry the fact that there are not properly structured products which would allow our private capital to come and play into the infrastructure space. What can be done about this, and in terms of what the World Bank perhaps could be doing, especially around de-risking these projects now to be able to bring in private capital?
What we need to do is have a steady flow of project, a very strong portfolio, to de-risk as much as we can the investment in Africa. So that's why we are doing the partial risk guarantees. That's why we are bringing other type of guarantee by MIGA, our guarantee wing. But we need to do more of it. So some initiatives have been started with our private sector branch, which is IFC, which is starting working with some of the investors, institutional investors, particularly insurance in Europe, to exactly do that.
Being in Kenya would be remiss if I don't ask you this question. What are your thoughts on the SGR, the standard gauge railway in this country?
This is a question about railways is always a complicated question. I think that the problem that we need to just think about is how all this costs to the economy. And if there is one solution which is more adapted to the financial needs and ability of our country. So what I think that one needs to continue thinking about is to look at the sustainability of that investment and how much it costs, and if that's sustainable to be able to do that. So I don't have a particular and definitive view on that.